UK house prices are dropping at one of the fastest rates in years, and thousands of properties are sitting unsold for months. But here's the shocking part. Experts didn't see it coming this quickly. What's really going on behind the scenes? Right now, buyers are pulling back, sellers are cutting prices, and the entire market is starting to feel unstable. Some are calling it a correction, but others are warning this could turn into a full-blown housing crash. So the big question is this the beginning of something much worse, or a once-in-a-decade opportunity? Stay with me, because what you're about to discover might completely change how you see the UK property market. Number 10. Sellers are slashing prices faster than ever. One of the strongest signs of a housing market crash is when sellers start cutting prices aggressively. And that's exactly what's happening across the UK right now. Homes that were once listed at premium prices are now seeing massive reductions, sometimes within just weeks of being on the market. This isn't normal behaviour. It's a clear signal of growing desperation among sellers. Why is this happening? Simply put, buyers are disappearing. With rising interest rates and financial pressure, fewer people can afford to buy. This leaves sellers with two choices: wait endlessly or drop their price to attract attention. And in most cases, they're choosing to cut prices fast. But here's where things get even more intense. When one seller reduces their price, it creates a chain reaction. And nearby properties are forced to compete, leading to even more price cuts. This domino effect pushes the entire market downward, accelerating the decline faster than expected. For buyers, this might look like an opportunity, but it also comes with risk. Because if prices continue falling, today's deal could become tomorrow's loss. And for sellers, the pressure keeps building. As the longer a property stays unsold, the more likely it is to lose value. This is how a market shifts, from stable to uncertain to rapid decline. And right now, the UK is showing all the signs. If this opened your eyes, drop a comment below and tell us. Would you buy now or wait for prices to fall even more? We put real effort into bringing you these insights, so hit subscribe. It's just one click, but it helps us more than you think. Number 9. Fear and negative market sentiment are spreading fast. Sometimes, markets don't crash just because of numbers. They crash because of how people feel. And right now, in the UK housing market, fear is spreading faster than facts. Every headline talking about falling prices, every expert warning about instability, and every story of someone struggling to sell their home is slowly shaping a powerful narrative. Now is not the time to buy. This kind of negative sentiment has a massive impact. Buyers start hesitating, even if they can afford a property. They begin to ask themselves, what if prices drop further after I buy? That one question is enough to delay decisions, and when thousands of people think the same way, demand drops sharply. At the same time, sellers become anxious. They see fewer inquiries, longer waiting times, and increasing competition. This pressure often forces them to lower expectations and accept lower offers. The result? A market driven less by logic and more by emotion and uncertainty. What makes this even more powerful is the snowball effect. As more people hold back, the slowdown becomes more visible, which creates even more fear. It's a cycle that feeds itself, turning a slowdown into something much bigger. In many ways, perception becomes reality, and right now, the perception of risk is pushing the UK housing market closer to a serious downturn. If this made you think differently, tell us in the comments. Is fear controlling the market, or is this a real crash? We spend hours researching to bring you the truth, so subscribe now. It's just one click, but it keeps us going. Number 8. Job uncertainty and layoffs are freezing big decisions. Another major force quietly pushing the UK housing market toward a downturn is job uncertainty. When people feel unsure about their income or future, the last thing they want to do is take on a long-term financial commitment like buying a house. And right now, that uncertainty is growing. Across multiple industries, there are rising concerns about layoffs, company cutbacks, and hiring freezes. Even those who are still employed are becoming more cautious. Instead of making big moves, they're choosing to wait, save, and play it safe. This shift in mindset has a direct impact on housing demand. Think about it. Would you commit to a 20 or 30-year mortgage if you weren't fully confident about your job? Probably not. And that's exactly what's happening across the country. Thousands of potential buyers are stepping back, not because they don't want to buy, but because they don't feel secure enough to do so. This hesitation creates a ripple effect. Fewer buyers mean fewer transactions, which leads to properties staying on the market longer. Sellers, in turn, are forced to adjust expectations, often lowering prices to attract the limited number of confident buyers still active. In times like these, the housing market becomes less about opportunity and more about stability and survival. And until job confidence returns, this pressure is likely to keep building. Be honest, would you buy a house if your job didn't feel secure? Drop your answer in the comments. We really want to hear your thoughts. We put serious effort into breaking this down for you, so hit subscribe. It's just one click, but it means everything to us. Number 7. Foreign investors are quietly pulling out for years. The UK housing market has been supported by strong foreign investment, especially in major cities like London. Overseas buyers saw UK property as a safe and profitable place to park their money. But now, that trend is starting to reverse, and it's creating serious pressure on the market. Global uncertainty, currency fluctuations, and changing regulations are making investors think twice. Many are now shifting their money to other countries where they see better returns and lower risk. As a result, the UK is losing a key source of demand that once helped keep prices stable. This might not sound like a big deal at first, but the impact is deeper than it seems. Foreign investors often buy high-value properties, and when they step back, those homes become harder to sell. And this creates a gap in the market, especially in premium areas, forcing sellers to lower prices to attract local buyers, who may not have the same spending power. At the same time, fewer international buyers means less competition, which further weakens price growth. What was once a strong pillar supporting the market is now slowly fading away. When big money starts leaving quietly, it usually signals a shift in confidence. And right now, that shift is adding even more pressure to an already fragile housing market. Here's something to think about. If global investors are pulling out, would you still feel confident investing? Tell us your opinion in the comments below. We work hard to bring you real insights like this, so subscribe now. It's just one click, but it helps us keep going. Number 6. Property investors are exiting the market fast. Another major warning sign is that property investors are starting to leave the market, and they're doing it quickly. These are the people who once bought multiple properties for rental income or long-term gains. But now, the numbers just aren't adding up anymore. With rising interest rates, higher taxes, and increasing maintenance costs, profit margins are shrinking. Many landlords are finding that their rental income no longer covers their expenses, especially if they have mortgages on their properties. This is forcing them to make a tough decision: hold and lose money, or sell and exit. And many are choosing to sell. This creates a sudden increase in available properties, adding more supply to a market that's already struggling with weak demand. The result? More competition among sellers, which leads to price reductions and slower sales. But there's another layer to this. When experienced investors, people who understand the market deeply, start pulling out, it sends a strong signal. It suggests that even those with knowledge and resources are losing confidence in the market's short-term future. For regular buyers, this can create confusion. Is this a golden opportunity? or a warning sign to stay away. Either way, one thing is clear. When investors exit at scale, it often marks the beginning of a major market shift. Let us know what you think. Are investors making a smart move by leaving, or are they missing a big opportunity? Drop your thoughts below. We put real effort into every video, so hit subscribe. It's just one click, but it truly supports our work. Number 5. Banks are tightening lending. Like never before. One of the most overlooked reasons behind the UK housing slowdown is how strict banks have become with lending. Getting a mortgage today is not as easy as it was a few years ago, and that's creating a major barrier for buyers. Banks are now increasing their checks, raising deposit requirements, and closely examining income stability. Why? Because in uncertain economic conditions, lenders want to reduce risk. They're being extra cautious about who they approve, which means many potential buyers are getting rejected or approved for much smaller loans than expected. This hits first-time buyers the hardest. These are the people who usually drive demand in the housing market, but when they can't secure financing, they're forced to stay out of the market. And without fresh buyers entering, the entire system starts to slow down. Even those who do qualify are facing challenges. Higher interest rates mean larger monthly payments, and stricter rules mean less flexibility. So instead of rushing to buy, many are stepping back and reconsidering. The result is a silent but powerful shift. Demand is shrinking, not because people don't want homes, but because they simply can't access the money. When credit becomes harder to get, the housing market naturally cools down. And right now, this tightening is playing a huge role in pushing the market toward uncertainty. Tell us honestly, have stricter bank rules affected your plans to buy a home? We'd love to hear your experience in the comments. We put a lot of effort into breaking this down for you, so subscribe now. It's just one click, but it helps us keep bringing you real insights. Number 4. Oversupply of homes is flooding the market. Another major factor accelerating the UK housing slowdown is something many people don't expect. Too many homes, not enough buyers. In several areas, especially newly developed regions, the market is becoming oversaturated with properties. Over the past few years, developers rushed to build more homes, expecting demand to stay strong. And for a while, it did. But now, with rising costs and fewer qualified buyers, those same properties are sitting unsold. What we're seeing is a growing imbalance. Supply is increasing while demand is shrinking. This creates intense pressure on sellers. When multiple similar homes are available in the same area, buyers gain more power. They can compare options, negotiate harder, and wait for better deals. Sellers, on the other hand, are forced to lower prices just to stay competitive. It doesn't stop there. New developments often come with attractive offers like discounts or incentives, which puts even more pressure on older listings nearby. This creates a ripple effect, dragging down prices across entire neighbourhoods. The longer this oversupply continues, the more it weakens the market. Homes stay listed for months, price cuts become more frequent, and confidence begins to drop. In simple terms, when there are too many choices and not enough buyers, prices almost always fall. And right now, that's exactly what's happening. What do you think? Is oversupply creating opportunity, or is it a warning sign of a deeper crash? Drop your thoughts in the comments below. We put real effort into every video, so subscribe now. It's just one click. But it truly helps us keep going. Number 3. Buyer demand is falling faster than expected. One of the clearest warning signs of a market slowdown is when buyers simply stop showing up. And that's exactly what's happening across the UK right now. Demand isn't just slowing down, it's dropping faster than many experts predicted. Fewer people are searching for homes, fewer viewings are being booked, and offers have become much rarer. Properties that once sold within days are now sitting on the market for weeks or even months. This sudden shift is creating a sense of uncertainty that's spreading quickly. So what's causing this drop in demand? It's a mix of everything: high interest rates, rising living costs, job uncertainty, and fear of falling prices. Buyers are becoming more cautious, choosing to wait rather than rush into one of the biggest financial decisions of their lives. There's also a psychological factor at play. When people believe prices might fall further, they hold back. This delay reduces demand even more, creating a cycle that's hard to break. The longer buyers stay on the sidelines, the more pressure builds on sellers. And when demand falls while supply stays high, the outcome is almost inevitable. Prices begin to drop. This is how markets shift quietly at first, and then suddenly feel like they're moving all at once. Right now, the UK housing market is clearly entering that phase. Let's hear from you. Are you waiting on the sidelines or still ready to buy in this market? Drop your answer below. We put serious effort into these videos, so subscribe now. It's just one click, but it means a lot to us. Number 2. The cost of living crisis is draining buyers completely. One of the biggest hidden forces behind the UK housing slowdown is the ongoing cost of living crisis. While headlines focus on house prices, the real pressure is happening inside people's daily lives. Rising bills, expensive groceries, and increasing energy costs are eating away at savings faster than ever. For many households, the dream of buying a home is being pushed further out of reach. Saving for a deposit has become incredibly difficult when most of the income is already going toward basic needs. Instead of planning for the future, people are focused on surviving the present. This shift in priorities has a direct impact on the housing market. When fewer people can afford deposits or feel financially stable, buyer activity drops sharply. Even those who had plans to buy are now delaying, waiting for a time when things feel more manageable. There's also an emotional side to this. Financial stress creates hesitation. People don't want to take risks when they're unsure about their monthly expenses. So instead of stepping into the market, they step back, and that hesitation slows everything down. The result is a quieter market, fewer transactions, and growing pressure on sellers to adjust expectations. In simple terms, when everyday life becomes more expensive, big financial decisions like buying a home take a back seat. And right now, that pressure is stronger than ever. Real talk, has the cost of living affected your plans to buy a home? Share your situation in the comments. We read every single one. We put genuine effort into these videos. So subscribe now. It's just one click, but it truly supports us. Number 1. Rising interest rates are crushing affordability. At the very core of the UK housing market slowdown is one powerful factor: rising interest rates. This single change is having a massive impact on how much people can afford, and it's quietly pushing thousands of potential buyers out of the market. When interest rates go up, mortgages become significantly more expensive. Even a small increase can add hundreds of pounds to monthly payments. For many families, that's the difference between being able to afford a home or being completely priced out. What makes this even more serious is how quickly rates have risen. Buyers who were once confident and ready are now stepping back, shocked by how much more they'd have to pay. This sudden jump has created a wave of hesitation across the market. It's not just new buyers either. Yet existing homeowners with variable or expiring fixed-rate mortgages are also feeling the pressure. As their payments increase, financial stress builds, reducing their ability to upgrade or invest further. The result? Demand drops sharply. Fewer buyers mean fewer sales, and that forces sellers to rethink their pricing. Over time, this creates downward pressure on house prices, accelerating the market slowdown. In simple terms, when borrowing becomes expensive, the entire system slows down. And right now, rising interest rates are acting like a brake on the UK housing market. Let's hear your take. Are rising interest rates stopping you from buying, or are you still planning to enter the market? Comment below. We put real effort into bringing you valuable insights, so subscribe now. It's just one click, but it helps us more than you know. So when you step back and look at the full picture, it becomes clear this isn't just a small slowdown. It's a combination of rising interest rates, falling demand, economic pressure, investor exits, and growing fear, all hitting the market at the same time. And when multiple forces collide like this, the impact becomes much more powerful. The UK housing market is now at a critical turning point. For some, this could mean risk and uncertainty. For others, it might look like a rare opportunity. But one thing is certain: the rules of the game are changing. What worked a few years ago may not work today. If you're a buyer, this is the time to be patient and strategic. Don't rush just because prices are falling. Look deeper, understand the trends, and make decisions based on long-term stability, not short-term emotions. If you're a seller, it's important to stay realistic. Pricing aggressively high in a shifting market could leave your property sitting unsold for months. And for investors, this is where experience truly matters. Markets move in cycles, and while downturns can be challenging, they also create hidden opportunities for those who are prepared. But perhaps the biggest takeaway is this: markets are not driven by numbers alone. They are driven by people, emotions, and confidence. And right now, confidence is being tested. The question is no longer if the market is changing, but how far will it go? Stay informed, stay cautious, and most importantly, stay ahead of the curve.